Today, I wish to consider one sum for a chapter of accounting ratio. The sum is from exercise. Observe the sum on the screen. First, I will read the sum for you. Then I will calculate the ratios question. Profit and loss account of PV Limited for the year ended on 31st of March 2003 is as under. From the given profit and loss account, you are required to calculate 1. Gross profit ratio, 2. Net profit ratio, stock turnover ratio and operating ratio. So these are the 4 ratios are required to be worked out from the information given to you here in this profit and loss account, trading profit and loss account. Purchase minus purchase return, sales minus sales return. These are the administrative expenses, total is 1,35,000. These are selling and distribution expenses, total is 1,65,000. Important point to be noticed is loss on sale of asset and profit on sale of investment. They are non-operating expenses and gains, losses and gains. First, I want to work out gross profit ratio. You know the formula for gross profit ratio. Gross profit divided by sales into 100. Gross profit 5,10,000. Sales is, net sales is to be taken 17 lakhs as the net sales. So gross profit divided by sales into 100. This is the formula. Let me take gross profit 5,10,000 divided by sales 17 lakhs into 100. If you work out 17 is a 51, 30% is the rate of gross profit. Now after this gross profit, we are required to calculate net profit ratio. The formula for net profit ratio, net profit divided by sales into 100. Remember that the net profit disclosed by profit and loss account is subject to change in light of non-operating losses and non-operating income. So this profit cannot be taken straight away. To calculate the net profit ratio, before taking such profit, you should observe profit and loss account. Do you find any non-operating expenses or losses that have been debited? You should also observe, do you find any non-operating income credited to profit and loss account? If you observe that, you will find that loss on sale of asset is a non-operating loss because it is not a loss on sale of goods. Similarly, profit on sale of investment is a non-operating income. So this effect of these two items on profit should be removed. After removing that, we will get the net profit that is available for calculating this net profit ratio. Now for that, look at the note. Non-operating incomes and expenses are strictly excluded when this ratio is calculated. Formula used for that is net profit for this ratio is equal to net profit as per profit and loss account minus abnormal profit. They are to be deducted because this has become a part of this profit, so this is to be deducted and abnormal losses are to be added. So if you work out on this basis, net profit as per profit and loss account minus abnormal profit, non-operating profit plus non-operating losses debited to profit and loss account 70,000. So 70,000 divided by sales 17 lakhs into 100. So this is how net profit ratio is worked out. This is an important consideration to take into consideration non-operating loss expenses debited to profit and loss account and non-operating incomes and gains credited to profit and loss account. Its effect on profit has to be removed. After that, whatever the net profit that you get, that is a right profit to be considered for calculating the net profit ratio, because we want to work out the operating profit that has been earned during the year. Next, stock turnover ratio. Now the formula for stock turnover ratio, cost of goods sold. divided by average stock. To find out cost of goods sold from sales, you have to deduct the gross profit. You will get the cost of goods sold. The other method to get the cost of goods sold is opening stock 7 lakhs plus purchases. Net purchase is 12 lakh 90,000 minus closing stock 8 lakhs. You can have the cost of goods sold. So here I am going to work out cost of goods sold by taking the formula sales minus gross profit. So sales 17 lakhs minus gross profit. I get the cost of goods sold 11 lakh 90,000. Now I want to work out average stock. Opening stock 7 lakhs plus closing stock 8 lakhs divided by 2. So average stock is equal to opening stock plus closing stock divided by 2. 7 lakhs plus 8 lakhs divided by 2. 15 lakhs divided by 2, that works out to be 7 lakh 50,000. So this is the numerator, this is the denominator. So cost of goods sold 11 lakh 90,000 divided by average stock 7 lakh 50,000. This works out to be 1.59 times is the stock turnover ratio. After calculating the stock turnover ratio, I want to find out the operating ratio. Now that next ratio, that is also based on trading and profit and loss account. The formula for operating ratio is cost of goods sold plus operating expenses divided by sales into 100. Now here, operating expenses to be considered is important point to be noticed. So look at this note. Operating expense consists of cost of goods sold, administrative expenses, selling and distribution expenses including depreciation, but financial expenses and taxes are not to be considered in operating expenses. So operating expense is made of cost of goods sold. Operating expenses, administrative expenses 1,35,000, selling and distribution expenses 1,65,000, including depreciation. So depreciation is also to be considered, but financial expenses and taxes, this taxes is not to be considered. Non-operating losses debited to profit and loss account is also not to be considered in operating expenses. So observe what I consider, what I include in operating expenses, and what I don't consider, what I exclude, what I don't attend. Observe it, and on the basis of that, look at the note that I prepare for operating expenses. So here administrative expenses, selling and distribution expenses, depreciation, loss on sale of asset and tax are avoided. So here the total of operating expenses works out to be 3,40,000. Cost of goods sold we have already worked out 17 lakhs minus 5,10,000. This we have already worked out. So here 11,90,000 plus 3,40,000 divided by sales 17 lakhs into 100. So here the operating ratios is worked out to be 90%. 17 lakhs 750. So 90% is the operating ratio. This is how we have worked out all the ratios: gross profit ratio, net profit ratio, stock turnover ratio, and operating ratio. And I have also demonstrated the important working notes and the theory explanation too for your better understanding. I think you have followed all these things